Amazon, ranked 4th in the world by market cap, is part of the Mag 7 and down 16% from all-time highs. Now the business must have had a bad quarter. If it didn't have a bad quarter, let's take a look at this year's earnings report to see if we can understand the underlying business and its potential growth. Starting off with revenue, we can see here that revenue for the year reached all-time highs of $638 billion, which is growth of 11% year on year. And more impressively, we can see here that this company has never experienced a downturn in its revenue since its IPO in 1995. Taking a look now at operating cash flow, we can see that for the year it reached a record high of $116 billion, which represents a growth of 36% year on year. Now this metric is really important for the company, and we will be using this metric to evaluate the company, but we'll explain later in the video about why this metric is so important. Here we're looking at CapEx, which reached a massive $83 billion for the year, which shows the business is heavily reinvesting into itself and into things such as AWS servers. Now free cash flow increased to $33 billion compared to $32 billion in the year prior. Now this is a relatively minor increase, but it's due to Amazon largely reinvesting its capital into the business for future growth. This means that the money that could potentially be returned to shareholders is being used for future growth in the business, which will increase future shareholder value. Amazon's newest segment of its business is AWS, which is their cloud-based service that achieved $108 billion in revenue, which you can see underlined here. This is 19% growth year on year, and it's the fastest growing segment of Amazon's business. Amazon has stated that this growth is due to increased customer usage, which continues to increase as Amazon continues to leverage and increase investment into its AWS service, which we'll look at in a minute when we take a look at its capital expenditures. Taking a look now at the future of the business, we can see that Amazon expects to reinvest $100 billion in the year 2025. If we're taking last year into context, 60% of all reinvestment went to AWS in 2024. So it's logical to assume that majority of this $100 billion figure will go into reinvesting into AWS. And for additional context, Amazon spent $26.3 billion in CapEx in Q4, and they said that majority of this money went to AI investments for AWS. On a side note, I would actually like to mention that CEO Andrew Jassy has stated in the most recent quarter, as you can see here, that AI represents for sure the biggest opportunity since the cloud and probably the biggest technology shift and opportunity in business since the internet. So Amazon is very bullish on AI and thinks that it's going to be a major future growth for the business. They are also expanding other operations of AWS, such as new data centers and chip development. Amazon has recently announced its new chip, Trainium 2, which is 40% more cost effective for training AI. Amazon has also created a new thing called Amazon Nova, which is their version of ChatGPT, which is more for businesses than consumers. On a side note, I would like to mention that the CEO has stated that capacity constraints is holding back growth for AWS. So there's a lot more future growth there, assuming AWS can grow to meet the demand. Also, money has been deployed into the more traditional stores of Amazon's business as they attempt to expand same-day delivery, which would allow consumers to receive their product quicker without having to leave their home. All of this is very good because it shows us that Amazon is using its operating cash flow to invest money into further growing and expanding the business, which creates future shareholder value. Bringing it back now to why we're using operating cash flow to evaluate Amazon. So when a business is heavily reinvesting into itself, it skews the free cash flow negatively, so the business ends up reporting a lot less free cash flow than it otherwise could have. In the case of Amazon, they have an average return on invested capital of 13.5% for the past 5 years, and the latest figure being 21%. This shows us that they can be trusted to reinvest wisely into the business. And also, operating cash flow shows us the true money that they can produce from their core businesses. Moving on now to valuation. The company has a market cap of $2.1 trillion with an operating cash flow of $116 billion, meaning that the company is currently trading at 18.1 times operating cash flow. Now, if we look at the 10-year average, we can see that that is 26.84. That means that the company is currently trading well below its historical average of operating cash flow. Taking a look at the DCF, I'm going to start with putting the metric growth rate of 15%. Now, I believe this is quite achievable for the company, and even though their growth rate for operating cash flow has peaked, it's well below the 5-year average of 24%, and I believe 15% is well achievable for the company. I'm going to leave shares outstanding the same at 1.29% because they do have quite a lot of stock-based compensation. For the price ratio, I set 21, which is below the 5-year average of 24.7, but it is logical to assume that it will decrease because their operating cash flow growth has begun to slow down. So with all this in mind, the fair value is 35% below the current market value and could return 17% annually for investors. Given Amazon's dominant position in e-commerce and its rapid growth seen in AWS, it's safe to say that Amazon isn't going anywhere and it's only going to become more prevalent as it reinvests into its business. It's for this and for its cheap value in the market today that I believe Amazon is a great long-term investment, and it's a stock that I personally have been adding to my portfolio since its recent dip. Finally, if there is any questions you want answered about Amazon, feel free to let me know and I will answer in the comments. Also, let me know if you have any recommendations on what company we should do next. But that's everything for today. So feel free to leave a like and subscribe, as we will be doing a lot more stock analysis in the future.